Hello students. In present video, I am going to explain about fourth problem from company accounts topic. I am taking this question from Advanced Accountancy subject, BCom second year, semester 3, Pankaj publications book. So previous videos links are given in the description box. Let us see the question first. This is a problem, fourth problem. Prosperous Company Limited issued 10,000 shares of 100 rupees each payable as under 30 rupees on application, 20 rupees on allotment, 20 rupees on first call, 30 rupees on final call. The public applied for 15,000 shares. Applied word is not there here, printing mistake. The allotment was made as under: to the applicants of 8,000 shares full, to the applicants of 5,000 shares 2,000, to the remaining applicants nil. Subsequently, the first and final calls were made. Under the terms of issue, the surplus application money could be kept against allotment and subsequent calls. All amount due on call was received. Give journal entries and prepare the opening balance sheet of the company. This is the question. Let us see the solution for this. Let us understand the question first. There is one public limited company. Company's name is Prosperous Company Limited. In question, its authorized capital is not given. So he has started the question with issued capital only. So we cannot write authorized capital details in the solution. Issued capital is company issued 10,000 shares at the rate of 100 rupees each. So one share price is 100 rupees. Now this 100 rupees is known as face value of the share or par value of the share. Company wants to collect how much capital? 10,000 shares at the rate of 100 rupees each, 10 lakh rupees. So issued capital is 10 lakh rupees. Applications came for 15,000 shares. So demand is for 15,000 shares. People want to buy 15,000 shares. But company can sell only 10,000 shares. So supply is for only 10,000 shares. Demand is more than the supply. This is known as oversubscription. And how company allotted these shares to them? See, to 8,000 shares applicants, company allotted fully. To 5,000 shares applicants, company allotted only 2,000 shares. Remaining. So remaining means total applications came for 15,000. 8,000 plus 5,000, 13,000. So 15,000 minus 13,000 is equal 2,000 shares. So remaining shares means 2,000 shares. And what company did? Company rejected to allot the shares. So no allotment is made for these 2,000 shares applicants. So finally, if you observe 8,000 plus 2,000, finally company allotted 10,000 shares to applicants. Therefore, subscribed capital is also 10,000 shares only. Don't think that people applied for 15,000 shares. Therefore, subscribed capital is equal 15,000 shares at the rate of 100 rupees each, 15 lakh. Even though public applied for 15,000 shares, company cannot allot 15,000 no? Because supply is only for 10,000 shares. So while calculating subscribed capital, not 15,000, how many shares are allotted by the company, that we should consider. Company finally allotted 8,000 plus 2,000, 10,000 shares only now. Therefore, subscribed capital is also 10,000 shares at the rate of 100 rupees each, 10 lakh. So issued capital is 10 lakh, subscribed capital is also 10 lakh. Then called up capital. How company wants to call this 100 rupees? On installment basis, 4 installments. First installment name is application money, 30 rupee per share company wants to collect. Second installment is called allotment money, 20 rupee per share. Third installment, first call money, 20 rupees per share. Finally, last call, final call, 30 rupees per share. Total 100 rupees. And in current year only, company made all these calls. Therefore, called up capital is also 10,000 shares into 100 rupees each, 10 lakh rupees. Then paid up capital is also 10 lakh rupees. because there are no calls in arrears. All shareholders have paid all the amounts to the company. So remember, issued capital, subscribed capital, called up capital and paid up capital. All amounts are same, 10 lakh rupees. And what is the new point in this problem? Three types of applicants we can see here. Applicants who send applications for 8,000 shares, applicants who applied for 5,000 shares, applicants who applied for 2,000 shares. So three types of applicants. First applicants who applied for 8,000 shares, they got full allotment. So how they paid? Application money, they applied for 8,000 shares now, at the rate of 30 rupees each, 2,40,000 rupees they paid. Allotment money, 8,000 into 20 rupees, 1,60,000 they paid. First call money, 8,000 into 20 rupees, 1,60,000 they paid. Final call money, 8,000 into 30 rupees per share, 2,40,000. So total 8 lakh rupees company received from them. Come to second category of shares. 5,000 people applied for and the company allotted only 2,000 shares. So what happened here? Let us see. First of all, how much they should pay we will see. Application money on 2,000 shares, because finally company allotted 2,000 shares only to them. On 2,000 shares at the rate of 30 rupees each, 60,000 they should pay. Allotment money on 2,000 shares at the rate of 20 rupees each, 40,000. First call money on 2,000 shares at the rate of 20 rupees each, 40,000. Final call on 2,000 shares at the rate of 30 rupees each, 60,000. Total 2 lakh. So on 8,000 shares, they should pay 8 lakh rupees. On 2,000 shares, applicant should pay 2 lakh rupees. 8 lakh plus 2 lakh, totally 10 lakh. So paid up capital is 10 lakh only now. And what about these people? Applicants applied for 2,000 shares and the company has not allotted any shares to them. So what happened to them? They paid application money now. 2,000 shares into, on one share application money 30 rupees. So 2,000 shares into 30 rupees each, 60,000 they paid through application. Company refunded this 60,000 rupees to them. So here, first category, last category, there is no confusion. First category applicants, so they have to pay 8 lakh rupees, they paid. Last category applicants, so on 2,000 shares at the rate of 30 rupees each, 60,000 they paid through application money and immediately company refunded that amount to them. Where the confusion is, second category of applicants. They applied for 5,000 shares, but company allotted 2,000 shares to them. On 2,000 shares, they have to pay 2 lakh rupees. No? See, they applied for 5,000 shares. On one share, application money is 30 rupees. So how much they paid through application? 5,000 into 30 rupees each, 1,50,000 they paid. But how much they supposed to pay? As company is allotting 2,000 shares to them, 2,000 shares into 30 rupees each, 60,000 only they should pay now. So they should pay 60,000, but they paid 1,50,000. How much extra they paid? 90,000. So instead of returning this 90,000 rupees to them, what company did? Remaining installments are there, no? Allotment money, first call money, final call money. This extra 90,000 company wants to adjust for remaining installments amounts. So how that adjustment is made, we have to carefully observe here. See, allotment money, how much they should pay? 40,000. So instead of calling to pay that 40,000, what company did? Through application they paid 90,000 extra, no? From this 90,000 rupees, company adjusted this 40,000. So from 90,000 for allotment, 40,000 if you subtract, then remaining extra amount is 50,000. This 50,000 is utilized for further installments. Next installment is first installment. No? How much they should pay? On one share, 20 rupees each. Company allotted 2000 shares to them. So 2000 shares into 20 rupees each, 40,000 they should pay. Instead of calling for this 40,000, what company did? Their money is with us now, 50,000 extra money. From this 50,000, that 40,000 first call amount also company adjusted. So after this adjustment, remaining extra money is 10,000. This 10,000 company utilized for final call. So final call on 2000 shares at the rate of 30 rupees each, 60,000 should come. Total 60,000 company cannot adjust because with company that extra amount is only 10,000. No? So from this 60,000, 10,000 is adjusted. Now the remaining 50,000 company collected from those applicants. So remember, application money 1,50,000 rupees came. Allotment money 40,000. First call money 40,000. Company is not collecting from applicants. So from this extra 90,000 rupees, company has adjusted this allotment amount and a first call amount. Now final call money 60,000 should come. In that 10,000 company adjusted from that application extra money. Remaining 50,000 company collected from applicants. So finally on 2000 shares also company collected 2 lakh rupees. No? That is why paid up capital is 8 lakh plus 2 lakh, 10 lakh rupees. So this is the meaning of this problem. Now what is asking in the question? He is asking us to write journal entries for these transactions and he is asking us to show the balance sheet also. First let us see the journal entries. First let us write the journal entries. First entries for application now. See, 3 types of applicants. First applicants, they applied for 8,000 shares. How much money is coming from them? On one share, application money is 30 rupees. So 8,000 shares into 30 rupees each, 2,40,000 rupees came from first category applicants. Second category applicants, they applied for 5,000 shares. On 5,000 shares at the rate of 30 rupees each, 1,50,000 they paid. Third category of applicants to whom company rejected to allot, they applied for 2,000 shares now. On 2,000 shares at the rate of 30 rupees each, they paid 60,000 rupees through applications. So total how much money came to company? 2,40,000 plus 1,50,000 plus 60,000, 4,50,000. And our assumption is company deposited that money in the bank. Nothing but applicants directly deposited that money in our bank account. So here 2 accounts are there. Bank is receiving this amount. Therefore bank account is one account. Applicants are paying this amount. So applicants are another account. So bank account is a personal account. Personal account rule, debit the receiver, credit the giver. Bank is a receiver now. Therefore we have to debit bank account. In first entry, bank account should be debited. Bank account debtor 2. Applicant's account is another account now. That account is also a personal account. So personal account rule, debit the receiver, credit the giver. They are givers, means they have to be credited. Instead of writing all these applicants' names, we write only one account. That account is share application account. For this credit, I will give another explanation also. That is, debtor is an asset. Asset shows a debit balance. Creditor is a liability. Liability shows a credit balance. Remember this important point. While writing journal entries, we use that concept. See here, applicants are giving this 4,50,000 rupees to the company. In future, company should return this money to applicants. To the company, applicants are creditors. So creditor is a liability. Liability shows a credit balance now. That is why share application account is created. Actually, applicants' names we have to credit because applicants are creditors here. So instead of writing applicants' names, we are writing this word. Therefore, share application account is also a personal account. It is representing all these applicants' names. Amount 4,50,000. This is journal format. Serial number, particulars, debit, credit. We can ignore LF number column. First entry is bank account data to share application account. So what happened here? Public applied for 15,000 shares. On one share at the rate of 30 rupees they paid. So 15,000 into 30 rupees per share, 4,50,000 rupees came towards application. Mention that in the narration. Being application money on 15,000 shares at a 30 rupees per share received. Second entry is for refunding the application money. Third category of applicants, they have applied for 2,000 shares. Through application, they paid 60,000 rupees. But company didn't allot any shares to them. Then company returns this 60,000 rupees to them now. For this return, we have to write the second entry. Company is returning to them. In first entry, in company's books, we wrote that from applicants, we received application money. For application money, they are creditors. Now, company is returning 60,000 rupees to third category of applicants. Therefore, those applicants are not creditors now. So, how we created a creditor account? By crediting share application account. How to cancel that? By debiting. Therefore, share application account should be debited. 2. From company's bank account, company is paying this 60,000 rupees. So, bank account is a personal account, no? Debit the receiver, credit the giver. Now, bank is giving 60,000 rupees to applicants. Bank is a giver. Therefore, we have to credit bank account. Amount to third applicants, company is returning 60,000 rupees. No? Therefore, amount is 60,000. This is a second entry. Second entry, share application account data to bank account. So what happened here? Applicants who applied for 2,000 shares, they paid 30 rupees into 2,000, 60,000 rupees for application money. No? Company is not allotting shares to them. So this 60,000 which is received through application, now company is returning to them. So this is the entry for returning the application money to these applicants. Mention that in the narration. Being application money is refunded on 2,000 shares at 30 rupees per share. How 2,000 shares are coming? Public applied for 15,000 shares. In this, three categories of applicants are there. First category applicants, they applied for 8,000 shares. Second category applicants, they applied for 5,000 shares. Now third category applicants applied for how many shares? Number is not given in the question. We have to calculate. Third applicants applied for 15,000 minus 13,000, 2,000 shares. Third entry is for transferring application money to capital account. This application money, allotment money, first call money, final call money. Finally, all these amounts we have to transfer to share capital account. Because from applicants, company is collecting share capital only, no? That 10 lakh rupees capital only, no? So share capital is also a liability. Because from applicants, company is collecting this 10 lakh rupees. In future, company should return this money to them. Liability shows a credit balance, no? Means share capital account should be credited to share capital account. And which account should be debited? Share application account. Because share application amount only we are transferring to share capital. So after transfer into share capital, share application account should get closed, no? Therefore, that account should be debited. Amount C. Finally, how much should be the share application amount? Company allotted 8,000 shares. And to second category applicants, company allotted 2,000 shares. So 8,000 shares at the rate of 30 rupees each, 2,40,000. Then here company allotted only 2,000 shares, no? So on 2,000 shares at the rate of 30 rupees each, 60,000. 2,40,000 plus 60,000, total 3 lakh. So on total shares, 10,000 shares. Finally, company allotted 10,000 shares only. On 10,000 shares at the rate of 30 rupees each, through application, how much money should come? 10,000 shares into 30 rupees each, 3 lakh rupees only, no? So that 3 lakh only we have to transfer to share capital account. Therefore here amount is 3 lakh rupees. See, in first entry we have credited share application account with 4,50,000. So roughly I will show share application account here. If you post this first entry, this is account now, left side debit side, right side credit side. So as per this first entry, 4,50,000 will be credited in share application account. So share application account is showing a credit balance of 4,50,000. Second entry, 60,000 is debited. Debit side 60,000. So after this second entry, how much will be the credit balance in share application account? 4,50,000 minus 60,000, 3,90,000 credit balance is there. Come to third entry. Here share application account is debited with 3 lakh rupees. 3 lakh is debited. After third entry, how much will be the balance in share application account? 4,50,000 credit balance minus 3,60,000 debit amount. Remaining amount is 90,000. So the balance in share application account is 90,000 rupees. Total 4,50,000, 4,50,000. Now this is the extra amount received from the applicants, second category applicants, because on 5,000 shares they paid application money, no? Extra 90,000 they paid. Now this extra 90,000 rupee company wants to adjust towards further installments. Second category applicants have to pay allotment money, first call money, final call money, no? So the application account credit balance 90,000 company wants to use for all those installment amounts. Third entry, share application account data to share capital account. So this is the entry for transferring application money to capital account, no? So what happened here? On 10,000 shares at the rate of 30 rupees each, 3 lakh rupee came. So that amount we are transferring to share capital account. Mention that in the narration. Being share application money on 10,000 shares at 30 rupees per share is transferred to share capital account. How 10,000 shares are coming? First category applicants applied for 8,000 shares. Second category applicants applied for 5,000 shares, but company allotted 2,000. So for first category applicants, company allotted 8,000 shares. 8,000 plus 2,000, total allotted shares are 10,000. Next come to allotment related entries. First transfer entry we should write, then received entry, transfer entry. See, application amount to transfer to share capital, we wrote this third entry now. In the same manner, we have to write fourth entry for allotment. So allotment money we want to transfer to share capital account. Then what is the entry? Share allotment account data to share capital account. Amount how much? See, to 8,000 applicants, company allotted all shares. To second category applicants, company allotted 2,000 shares only. To third category applicants, company didn't allot anything. So don't consider this third category of applicants. Here company allotted 8,000 shares. Here company allotted 2,000 shares. 8,000 plus 2,000, total 10,000. On one share, allotment money is 20 rupees. So on 10,000 shares at the rate of 20 rupees each, 2 lakh rupees should come. Amount is 2 lakh rupees. Why share allotment is debited? So applicants have to pay this 2 lakh rupees to the company. To the company, applicants are debtors. So their names we cannot write now. Therefore, instead of their names, share allotment account word we wrote. And why share capital account is created? Share allotment money we want to transfer to share capital now. So share capital is a liability. Liability shows a credit balance. That is why share capital is created. Fourth entry, share allotment account data to share capital account. For what we are writing this entry? for transferring allotment money to capital account. No? On 10,000 shares, allotment money should come. On one share, allotment money is 20 rupees. So 10,000 shares into 20 rupees each, 2 lakh rupees. Mention that in the narration. Being share allotment money on 10,000 shares at 20 rupees per share is transferred to share capital account. How 10,000 shares are coming? Company is allotting 8,000 shares to first category applicants, 2,000 shares to second category applicants. Total allotted shares are 10,000. Now come to fifth entry for receiving the amount. See, third category applicants, now we can forget because application money we received from them and the company returned that application money. So while writing allotment entries, first call entries, final call entries, we need not to consider third category of applicants. Come to second category applicants. So they applied for 5,000 shares now. How much extra they paid? 90,000 rupees. Now company allotted 2,000 shares to them. On 2,000 shares at the rate of 20 rupees each, they should pay allotment money. 40,000 they have to pay. Instead of collecting that 40,000 rupees from them, company wants to adjust that money from application account. So from 90,000, if company adjusts 40,000, then the remaining amount in application account is how much? 90,000 minus 40,000, 50,000. Now that 50,000, finally company wants to transfer to calls in advance account. So in 90,000, 40,000, companies transfer into share allotment account. 50,000, companies transfer into calls in advance account. Then share application account will get closed. How it appears in the account, let us see. 40,000 company wants to transfer to share allotment account from share application account. 50,000 is the final credit balance in share application account now. By transferring to calls in advance account, company wants to close this share application account. Finally, two side totals are 4,50,000. Means there is no balance carried out in share application account. Means share application account is closed. See, from share application account, 40,000 we should transfer to share allotment account. 50,000 we should transfer to calls in advance account. For this, we have to write this fifth entry. When you transfer like that, share application account will get closed. So, till fourth entry, when you observe, in share application account, 90,000 credit balance is appearing now. Because 4,50,000 is created in first entry, in second, third entry, 3,60,000 only debited. So remaining amount 90,000 is a credit balance in share application account. Finally, that credit balance we are transferring to those two accounts. So now that credit balance will get closed. By crediting, we have created share application account credit balance 90,000. If you want to cancel, you have to debit. Therefore, share application account should be debited with how much amount? 90,000. In this, 40,000 companies transfer into share allotment now. Credit share allotment with 40,000. 50,000 companies transfer into calls in advance account now. Credit calls in advance account. 50,000. Why share allotment account is created? Once you see previous entry, fourth entry. In this entry, we wrote that from applicants, we should receive 40,000 rupees. For 40,000 rupees, applicants are debtors. Now, 40,000 we are adjusting from application account. Means applicants need not to pay this 40,000. They are not debtors. By debiting in fourth entry, we wrote that they are debtors. Now they are not debtors now. We have to cancel now. By crediting, we are cancelling that. And why calls in advance account is created? Calls in advance account is also a personal account. Because this 50,000 is what? From applicants, company received that money in advance. Means for this 50,000 rupees, applicants are creditors no? So creditor is a liability, liability shows a credit balance. Instead of writing those applicants' names, we wrote this word, calls in advance. Therefore, calls in advance account is also a personal account, representative personal account, because this account is representing applicants' names. So this is the fifth entry. Fifth entry, share application account data to share allotment account to calls in advance account. So narration, what we did here, on 2000 shares, allotment money 40,000 should come. We are adjusting that money from excess application money. In 90,000, when 40,000 is adjusted, remaining amount is 50,000. That remaining amount we are transferring to calls in advance account. Thus, share application account amount 90,000 is there, no? In this, 40,000 we are transferring to share allotment account, 50,000 we are transferring to calls in advance account. Thus, share application account is closed. Mention that in the narration. Being allotment money on 2000 shares at 20 rupees per share is adjusted from share application account, and the remaining debit balance in share application account 50,000 is transferred to calls in advance account. How 50,000 is coming? In 90,000, 40,000 we have adjusted for allotment. So 90,000 minus 40,000, remaining amount is 50,000. Now come to sixth entry. Fifth entry is for what? Receiving allotment money from second category applicants. In sixth entry, we should write first category applicants related allotment money received entry. So they have to pay on 8,000 shares, no? Allotment money. Per share allotment money is 20 rupees. On 8,000 shares, 8,000 into 20 rupees, 1,60,000. And they paid that money. Bank is a receiver now. Therefore, bank account data. 2. See this transfer entry, fourth entry. In fourth entry, we wrote that they have to pay allotment money to the company. They are debtors. Now they paid, no? So we have to cancel this debtor, no? By debiting, we have created a debtor account. If you want to cancel, you have to credit. Therefore, we should credit share allotment account. On 8,000 shares, at the rate of 20 rupees each, 1,60,000 is coming from first category applicants. Write that amount, 1,60,000. This is sixth entry. Sixth entry, bank account data to share allotment account. Narration, see, first category applicants, they have to pay allotment money on 8,000 shares at the rate of 20 rupees each, 1,60,000. So that amount they paid. For that we are writing this entry now, mention that in the narration. Being allotment money on 8,000 shares at 20 per share received. Allotment related entries completed. Now come to first call. Share first call. Finally company allotted 10,000 shares. On one share first call amount is 20 rupees. On 10,000 shares, 10,000 shares into 20 rupees each, 2 lakh rupee. Like allotment, in case of first call also, first transfer entry we should write, next received entry we should write. First transfer entry. So share first call money, we want to transfer to share capital. Share capital is a liability, liability shows a credit balance. Therefore, we should credit share capital account. Which account we should debit? See, 2 lakh rupee should come from applicants. So for 2 lakh rupee to the company, applicants are debtors. Debtor is an asset, asset shows a debit balance. We should debit applicants' names. Instead of writing applicants' names, we write share first call account. Amount 2 lakh rupees. Instead of writing applicants' names, we are writing share first call account name. Means share first call account is also a personal account, because applicants' accounts are personal accounts now. Seventh entry, share first call account data to share capital account. Company allotted 8,000 plus 2,000, total 10,000 shares now. On one share, first call amount is 20 rupees. So 10,000 into 20 rupee, 2 lakh rupees should come towards first call. That amount we are transferring to share capital now. Mention that in the narration. Being share first call money on 10,000 shares at 20 rupees per share is transferred to share capital account. Next entry is for receiving first call money. See, in case of allotment, fifth entry, sixth entry, we wrote for receiving allotment money now. Fifth entry is related to second category applicants. Sixth entry is related to first category applicants. So for second category applicants payment, one entry we wrote. For first category applicants payment, another entry we wrote. But for first call money, we will combine these two. First category applicants, second category applicants. They paid first call money now. For that we can write only one entry. Why like that? Because if you observe this fifth entry, second category applicants, company allotted 2000 shares to them. So through application they paid extra. That extra amount we are adjusting from application money, and the remaining balance in application money we are transferring to calls in advance account. That is why fifth entry, sixth entry we cannot combine. But while writing eighth entry, that extra amount is in calls in advance account only. Na? Like this, we need not to transfer anything to calls in advance now. Already we have transferred. Therefore, we can write only one entry for receiving allotment money. First come to first category applicants. On 8,000 shares at the rate of 20 rupees each, they paid first call money. So they are paying that money into bank account. So bank account is a personal account. Debit the receiver is applicable. Bank account should be debited. Bank account debtor. How much they are paying? 8,000 shares into 20 rupees each, 1,60,000. Next come to second category applicants. How much they should pay? Company allotted 2,000 shares to them. So on 2,000 shares at the rate of 20 rupees each, 40,000 they have to pay towards first call. That 40,000 company can adjust from this calls in advance amount now, 50,000. So to understand this point in detail, like share application account, I will show you calls in advance account also. Debit side, credit side. See this fifth entry. Calls in advance account is created with 50,000. When you post this entry in that account, credit side 50,000 will be there now. So after fifth entry, there is a credit balance in calls in advance account, 50,000. Now from this 50,000, company wants to adjust 40,000 towards first call money. Then 40,000 will be debited to share first call account. Now the remaining balance in calls in advance account is 50,000 minus 40,000, 10,000. Total 50,000, two sides. Which account we should debit? Calls in advance account. Calls in advance account debtor. Amount 40,000 we are transferring to first call now. 40,000. Two. Which account we should credit? In seventh entry, we wrote that from applicants we should receive 2 lakh rupees. For 2 lakh rupees, applicants are debtors. Now they are not debtors because first category applicants, they paid first call money. Second category applicants, so from that excess amount we have adjusted, meaning they also paid. Now they are not debtors, means this share first call account we have to cancel. By debiting we have created this account. If you want to cancel, you have to credit to share first call account. Total 2 lakh rupees. This is 8th entry. 8th entry, bank account data, calls in advance account data to share first call account. Narration, share first call 2 lakh rupees should come on 10,000 shares. First category applicants, on 8,000 shares at the rate of 20 rupees each, they paid first call money. Second category applicants, on 2,000 shares at the rate of 20 rupees each, company is adjusting from calls in advance account. Mention that in the narration. Being share first call money on 8,000 shares at 20 rupees per share received, and on 2,000 shares at 20 per share is adjusted from calls in advance account. Now come to 9th entry, share final call related entries. First transfer entry, then amount received entry. To transfer first call amount to share capital, 7th entry we wrote now. In the same manner, we have to write the entry here. Instead of share first call, debit share final call account. Share final call account data to share capital account. Amount 8,000 plus to second category applicants, company allotted 2,000. 8,000 plus 2,000, 10,000 shares. Per share, final call amount is 30 rupees. So on 10,000 shares at the rate of 30 rupees each, 3 lakh should come. Amount is 3 lakh rupees. Same explanation. Why share final call account is debited? From applicants, 3 lakh should come. Applicants are debtors for 3 lakh. Instead of writing applicants' names, we have debited share final call account. We are showing that they are debtors to the company. Share capital account is created because it is a liability. Liability shows a credit balance. Ninth entry, share final call account debtor to share capital account. Narration, on 10,000 shares at the rate of 30 rupees each, 3 lakh rupees should come towards final call. That amount we are transfer into share capital. Mention that in the narration. Being share final call money on 10,000 shares at 30 rupees per share is transferred to share capital account. Now come to 10th entry, last entry for receiving share final call amount. Like first call, for final call also, for first category applicants, second category applicants, we write only one entry. See, first category applicants on 8,000 shares, on one share final call amount is 30 rupees, no? At the rate of 30 rupees each, 2,40,000 should come. Second category applicants, company allotted 2,000 shares to them. On one share 30 rupees the final call money. So 2,000 shares into 30 rupees, 60,000 should come. First category applicants, 2,40,000 should come. Second category applicants, 60,000 should come. Total 3 lakh rupees. From first category applicants, company colors that money, 2,40,000. Come to second category applicants, they have to pay 60,000. And in calls in advance account, 10,000 credit balance is there. Now company can use this money for final call, no? So this 10,000 company utilizes for share final call. Thus, calls in advance account is also closed because two side totals are same now. There is no balance in this account. So what happened here? The balance 10,000 is transferred to share final call account and a calls in advance account is closed. In 60,000 up to 10,000 company can adjust. Remaining 50,000 second category applicant should pay to the company. So total 3 lakh they should pay. 10,000 company can adjust from calls in advance. Finally, how much they are paying to company? 2,40,000 plus here from 60,000, 10,000 if you adjust 50,000 they are paying. So 2,40,000 plus 50,000, 2,90,000. So finally, from these two category applicants, 2,90,000 is coming to the company. This money is deposited in bank account. So bank is a receiver for 2,90,000. Therefore, debit bank account with 2,90,000 rupees. Bank account data 2,90,000. 10,000 we are adjusting from calls in advance account. Therefore, debit calls in advance account with 10,000 rupees. Which account should be created? In ninth entry, we wrote that from applicants, final call money should come. They are debtors for this amount. Now they paid that amount. Means debtor account we have to cancel. By debiting we have created share final call account. If you want to cancel, you have to credit. So credit share final call account. We have created this account by debiting 3 lakh. We should cancel by crediting 3 lakh. 10th entry, bank account debtor, calls in advance account debtor to share final call account. Narration, final call money 3 lakh should come. In calls in advance account 10,000 balance is there, no? That amount we are adjusting towards final call. So in 3 lakh when 10,000 is adjusted, remaining money 2,90,000 company should receive from applicants. And company received that amount from applicants. Mention that in the narration. Being the credit balance in calls in advance account is adjusted for share final call and the remaining amount 2,90,000 is received on 10,000 shares. How 2,90,000 is coming? 3 lakh should come. 10,000 we are adjusting from calls in advance account. So remaining amount is 2,90,000 rupees. All entries are available on the board now. Let us see some important points once again. Application money. Actually, company allotted 10,000 shares only. So on 10,000 shares at the rate of 30 rupees each, 3 lakh should come. But 4,50,000 came because public applied for 15,000 shares. At the rate of 30 rupees each on 15,000 shares, they paid 4,50,000. So how much extra money came? 1,50,000. 4,50,000 minus 3 lakh. In this 1,50,000, to third category applicants, company rejected to allot the shares. So in this 1,50,000, 60,000 immediately company returned to them. Now remaining extra money with the company is 1,50,000 minus 60,000, 90,000. So this 90,000 extra money to second category applicants for their allotment, first call, final call, company wants to adjust. And in fifth entry, what we did, share allotment to second category applicants, they have to pay 40,000 on share allotment now. From this extra amount, 90,000, this 40,000 we have adjusted. Now, remaining amount in share application account is 50,000. That 50,000 we have transferred to calls in advance account and we have closed share application account. Now that extra amount is not in share application account. It is in calls in advance account. In 8th entry, what we did, from this extra amount, 50,000, first call money, 40,000, second category applicant should pay now. So that 40,000 we have adjusted from this calls in advance balance 50,000. So after 8th entry in calls in advance account, remaining balance is 50,000 minus 40,000, 10,000. In 10th entry, finally the 10,000 also we have adjusted for second category applicants final call amount. So these are the journal entries. Take a screenshot of journal. Next page. Journal is completed. Next, see the balance sheet. See, this is balance sheet. Heading, balance sheet of prosperous company limited as at dash. Liabilities amount, assets amount. Liability side, under share capital heading, we have to show different categories of capitals. In question, authorized capital is not given now. Therefore, for authorized capital, nil. Issued capital, company issued 10,000 shares. One share at 100 rupee each. So 10,000 into 100 rupee, 10 lakh rupees. Next, subscribed capital, public applied for 15,000 shares. But finally, company allotted 10,000 shares only, no? Therefore, subscribed capital also not 15,000 shares, 10,000 shares only. So 10,000 shares of 100 rupees each, 10 lakh rupees. Next, called up and paid up capital. So company made all calls, application, allotment, first call and final call. Means 100 rupee company called on 10,000 shares. Therefore, called up capital is 10,000 shares at the rate of 100 rupees each, 10 lakh. Even paid up capital is also same because there are no calls in arrears. Applicants paid all these amounts. Therefore, paid up capital is also same calculation, 10,000 shares at the rate of 100 rupees each, 10 lakh. So while calculating liability side total, last amount, paid up capital amount only we should consider. So we should not consider issued capital amount and subscribed capital amount. That is why for issued capital and subscribed capital we drew lines. Means we are not going to consider these amounts for totaling purpose. Now come to asset side. Finally, how much money came to company? 10 lakh rupees. That 10 lakh, our assumption is applicants paid that money in our bank account now. Therefore, under asset side write down cash at bank 10 lakh rupees. Total 10 lakh. While writing journal entries, we opened calls in advance account now. But calls in advance amount we are not showing in balance sheet because the balance in calls in arrears totally we have adjusted for allotment, first call and final call. So after the adjustments in calls in advance account, there is no balance at all. That is why calls in advance account is not appearing in balance sheet. Take a screenshot of balance sheet. This is the end of current video. Hope this video is helpful to you. Thank you.